Hello, welcome to CATEX TV. My name is Frank Fortunato. This is a broadcast from Princeton, New Jersey. Today is August 2nd, 2011. Well, last night in the U.S. House of Representatives, the one branch of the Congress, one house of the Congress, passed the debt ceiling bill. The biggest surprise of all was that Congresswoman Gabrielle Giffords, who had been very, very seriously wounded about 7 months ago in the shooting in Tucson, appeared for the first time since her shooting on the floor of the House of Representatives. It was quite a surprise appearance. She received a rousing ovation from both sides of the aisle. Very emotional. Today at 12 noon, the Senate is scheduled to vote on the bill, and at some point this afternoon it will be sent to the White House and the President will sign the bill. Meanwhile, pressure is increasing internationally on Syria, on the regime of President Bashar Assad, for the increasing violence and willingness to essentially execute his citizenry in an increasingly futile attempt, it seems, to keep his hold on power. The Europeans and again the Russians continue to speak out loudly. The United States seemingly is following a little bit behind. It remains to be seen what's going to happen there. Meanwhile, Ed Noonan at Balladus is keeping the pressure on transatlantic. Yesterday, in his regularly scheduled call with analysts reporting on the Balladus financials for the quarter, Mr. Noonan engaged in a discussion in response to a question about the board of directors of Transatlantic. He essentially castigated them for not acting in the best interest of their shareholders. It was a fairly direct attack on them. Again, Transatlantic has been served notice by Mr. Noonan. Mr. Noonan usually gets what he wants. And you can't blame him. If the deal is better based on the Balladus proposal, it's something that needs to be looked at. I'm not saying that it is or isn't. I don't know the facts, but it needs to be looked at. Off the coast of Hispaniola and Guadeloupe right now, Tropical Storm Emily seems to be gaining some strength. It's approaching the Dominican Republic. It's about 245 miles southeast of San Juan, Puerto Rico. It's moving relatively quickly at 16 miles an hour. Tropical storm winds extend about 70 miles from its core. It's got maximum sustained winds of about 40 miles per hour. At 40 miles per hour, it's the lowest rung to be named as a named storm, actually to be named as a hurricane. So we'll see what happens. Tropical storm warnings are issued for Puerto Rico and the islands of Guadeloupe. Probably it's going to skirt Florida over the weekend, they're saying. It probably will not be a very large event. The extraordinarily strong storms generally form much further to the east, out by the Cape Verde Islands, and they have several thousand miles of warm ocean water over which they can pass, increasing in intensity. Emily formed rather late in the game. In astounding news, the U.S. Second Circuit Court of Appeals has thrown out the convictions of 4 former executives of General Re and 1 former AIG executive who had been accused of engaging in 2 sham reinsurance deals in 2000 and 2001 that enabled AIG to artificially inflate reserves by $500 million. Former Gen Re CEO Ron Ferguson, along with his Gen Re colleagues, Elizabeth Monrad, Robert Graham, and Chris Garand, as well as AIG's Kristen Milton, were convicted of fraud and conspiracy charges in a U.S. court in Connecticut 3 years ago for engaging in a lost portfolio transfer deal. However, yesterday, the Federal Second Circuit Court of Appeals found that the lower court had made a mistake in giving its jury instructions and by permitting prosecutors to introduce present stock price data into evidence. The appeals court ordered a new trial of the 5 executives. According to the court yesterday, the charts were prejudicial because the lost portfolio transfer was one of several problems besetting AIG at that time. This is according to the judge yesterday, Dennis Jacobs. The charts suggested that this transaction caused AIG's shares to plummet 12% during the relevant time period, which is without foundation. Given the role of AIG in the financial panic, it prejudicially cast the defendants as causing an economic downturn that has affected every family in America. Prosecutors claimed that the lost portfolio transfer deals caused a drop in AIG's share value that defrauded investors of about $600 million. AIG had a lot of problems, the least of which were the lost portfolio transfers. The credit derivative swap coverage was probably the worst. If Joseph Cassano was not convicted of anything, I find it a little bit curious that these people were. Nevertheless, this is one of the last remaining legacies of none other than Elliot Spitzer that's been thrown out. No time has been set yet for the new trial. However, you can be sure that Mr. Ferguson, Milton, Monrad, Garand, and the other gentlemen are breathing a big sigh of relief. CAT modeling firm Risk Management Solutions, owned by the Daily Mail Group, has offloaded its loss-making Indian Geographic Information Services division called RMSI. This was confirmed in the Daily Mail newspaper this morning. It will retain RMS India, including its Center of Excellence that provides support for RMS's data business and software development service. In the 9 months to the beginning of July, RMSI produced an operating loss of £4 million on revenues of £7 million. Flagstone Re swung to a net loss for both the second quarter and first half of the year as cat losses from American tornadoes and storms and a third New Zealand quake compounded Q1 cat losses. For the first half of this year, Flagstone swung to a net loss of $181 million compared to income of about $45 million last year. It also swung to an underwriting loss of about $182 million from a net income of $14 million last year. Their combined ratio jumped to 144.6% from 44%. The bulk of the cat losses were absorbed by Flagstone's reinsurance segment, which swung to an underwriting loss of about $168 million from year earlier income of $25 million. The story was the same at Allstate. Allstate swung to a first half loss of $101 million compared to a profit of $265 million last year. It posted a $620 million net loss for Q2 on record cat losses of $2.3 billion. Mainly from U.S. tornadoes and storms, pushed the combined ratio up to 123% from about 97%. And Partner Re in Bermuda beat every Wall Street estimate. It reported net income of $124 million for the second quarter, despite having a net loss for the 6 months of the first 6 months of the year of about $682 million as a result of cats. Second quarter operating earnings per share were 98 cents. Analysts had been expecting 56 cents a share. Partner Re paid out more than $1 billion in cat claims in the first 3 months of the year, and tornadoes in the U.S. during the second quarter cost the company about another $90 million. And Ford Motor Company is recalling 1.1 million F-150 and F-250 and Lincoln Blackwood pickup trucks. The models being recalled were sold in cold weather states where road salt can cause metal straps holding up the gas tanks to rust. If the straps rust too much and break, the tanks can then hit the ground, rupture, and catch fire. This defect has been blamed for 8 fires, 3 of which spread to the rest of the truck. 1 person was injured very seriously, suffering first and second degree burns. The pickups have been involved in 3 recalls going back to 2008. Involving millions of vehicles. That's the news for today. If we have any breaking news, we'll come back and tell you. In the meantime, thank you for watching, and we'll see you tomorrow.